Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, we have read the title, right? Can Titan crash by 25%? Well, Titan is one of the renowned gold jewelry company, and with its wide product portfolio right into the jewelry basket, right into the fashion accessories, perfumes, eyewears, uh, it has diversified tremendously. But looking at the technical chart structure, I believe something is fishy onto the price action, and the momentum here can be very painful for an investors who are looking for an upside. I believe the stock is being into not an investor's basket, but it could be the trader's basket, looking at the momentum in the future. Let's start with the chart first over here. I would like to start this time onto the daily chart and then move on to the weekly chart. Generally, I do the top down approach, but this time I'm just looking at a bottoms up approach. Let's look at the daily chart first over here. The daily chart first, if you look at the daily chart, I have highlighted the buying climax. I believe the whole the momentum right from if I just look at the chart into the June, July, August 2021 to right into the April 2022 seems to be a distribution process. If I just look at the recent rally, if you look at the momentum drawn on the chart, the buying climax, and if I look at the rally over here, it was fueled with huge volumes. And if I look at the bottom, I have marked the volumes over there. And if you look at this rally, this is driven by huge volumes, and then the prices went into the consolidation. Now if I look at the volume bars over here, the average daily bars the volumes is very much higher, where I've shown the arrow, and the momentum was very onto the positive side. Then look at the second chart over here. Okay, if you look at the green lines over here, it is a form of consolidation phase where it moved into the automatic reaction. Support was taken, prices went higher, prices made lower high lower low structure, changed back to the higher high higher low structure, and it went on to mark the cross the previous high, which was the buying climax high, and marked as upthrust. Now if you look at the volumes bar over here, after buying climax volumes which were very much higher and above the average, the volume started drying out. Now if you look at the phase between buying climax to the upthrust, the volumes were drying out, and look at the average volumes, we haven't seen a huge big positive bar even though prices were trading near the all time highs. No volume participation, no buyers contribution, no investors looking for an huge accumulation to take prices higher. And now here this is the first time for me to be cautious, where the prices have gone above the buying climax but the volumes is missing. Look at the upthrust, prices went above the higher but in the end ended on a negative note. The following where they have marked the upthrust highs, look at the following bullish candle, still the high was unable to take out, and then we saw a negative momentum. So here after the buying climax, prices going into the consolidation, the lack of volumes, prices moving to the new all time high, still lack of volumes is a sign of cautious for me. Look at the third chart over here. Now if you look at the blue lines over here, blue lines, post the upthrust, the prices again started going lower, trying to go higher. There was a previous swing lows broken down where I have marked that trap. The previous lows been taken out, where the bulls were those who were looking for a previous swing as a stop loss have hit, and then prices went again to the higher levels. Again a new 52-week high or new all-time high. But look at the volumes. Are they contributing at a larger scale? No. The volume which was there in buying climax dried out into the upthrust, into the fake out. The volumes were still missing even though prices have hit all-time high. Now again, if you look at the red lines, we saw a sharp downside correction. Generally, when the V-shaped recovery happen where prices fall and then rally, this is inverse V-shaped fall. Now when the prices go higher and it falls at a faster pace, the law of gravity says that when the things go higher, falls at a faster pace, and that's what happening into the Titan over here. Now look at the volumes when the selling pressure started. Even though prices, if you look at the fake out high where the blue lines was, if you look at the blue volume bar, even though the volumes were very much higher at the highs, it failed to capitalize the momentum where the bulls were had an opportunity to go take prices higher. They failed to capitalize when the all-time high was it, and bears attacked very sharply. And look at the bearish volumes, consecutive bearish volumes with a huge bars. This is basically the volume spread analysis. And if I just look at the whole distribution process, it is defined by Richard Wyckoff in his Wyckoff theory of distribution. And he clearly indicates that when these things happen, it is a time that when institution or the big players sell, they sell in a staggered manner, and the distribution process take times. And now we are nearly, I would say 9-10 months where the distribution process is gone. Prices are exiting, and now I think the price is starting the downwards journey. Now if I just look at the red lines over here, look at the volumes increasing. Volumes were seen in last 3-4 trading sessions in the last week. We still saw the volumes picking up. So I think this is a sign of distribution for me, and probably I believe till the new all-time high is not taken out with huge volumes. 2768 was the all-time high, till 2800 keeping a slight cushion over here. I think this stock is away, should an investor should be away from this stock till 2800 is not taken out. In case you are holding, you look to book the profits at the higher levels. In case 2800 is crossed, you can re-enter at any time, but in case prices dip, you might lose the opportunity over here. Keeping the bottom up approach, look at the weekly chart over here. One thing which is very annoying me for the bulls as an investor is look at the RSI on the lower panel. Even the price is hitting all-time high, RSI failed to cross 70 levels again, and generally it is said that when 65-70 levels is crossed on the RSI on a weekly and monthly scale, it is a fresh bullish trend emerging into the stock. This time it failed to cross 70, and it is a sign of distribution for me. Onto the daily chart, weekly chart failing to see the strength indicates that it is a time to avoid the stock. And as an investor, I would look for booking for a profits in case you have bought at the lower levels. In case 2800 is taken out, you can any day re-enter, but as of now this stock is an avoid for me, and I would look for lower levels onto these stocks. Signing off, Brijesh Bhatia.
Our new research uncovers some shocking truths behind today's hottest investment opportunity, electric vehicles. Don't invest your money in EV stocks before seeing our research. Click here to sign up for our special event to know it all for free.